Let's say you have a hail or windstorm at your house and it damages your property. The first thing you're gonna do is probably contact your insurance company and file a claim. The next part is an insurance adjuster is gonna come out to your home, inspect your property, look at your roof, and they're gonna give you about a 12 to 15 page estimate with a whole bunch of paperwork, and they're gonna cut you a check. A lot of homeowners have questions on what to do next and how the money breaks down. Let's break it down for you. The insurance adjuster is gonna come out to your home and they're gonna estimate the grand total of the claim, and in this case, the roof. The grand total of their estimate is the RCV, or replacement cost value. That is the total replacement cost of the claim as estimated by the insurance company. But they're not just gonna give you a check for $10,000. It'd be nice, but they won't do that way. What they're gonna do is depreciate the roof based on its age. So let's say you have a 30-year grade shingle, okay? And it's about 10 years old. They're gonna depreciate the value of that roof about 30%. That's how they calculate depreciation. In this example, it'd be about $3,000. This money is withheld until the end of the project. So 10 minus 3, then they're gonna deduct out the portion that you owe, which is your insurance deductible, which is $1,000 in this example. And there's your deductible, which you have to pay. So the $10,000 minus the $3,000 depreciation minus the deductible brings you to $6,000, which would be the amount of your first check. This is also known as an actual cash value payment, right? Which represents the depreciated amount less the deductible. Again, that's your first check. We meet a lot of homeowners as a roofing contractor that believe that this is all they're gonna get. And so they start looking for really cheap ways to do their roof so that they can afford to do it for this first check. Here's why you don't need to do that. Most homeowners, in our experience, have what's called a replacement cost policy. So that means that the insurance company will pay the replacement cost as long as the costs are documented and actually incurred. So here's what that looks like. Once the work is done, a roofing contractor like us would provide a final invoice and documentation directly to the insurance company, showing that the full value of the roof was incurred and the job was done correctly. That $3,000 in depreciation would then be paid, released to you as a second check. Now you might be saying, okay, great, I got two checks, one for $6,000 and one for $3,000. That brings you to $9,000 with your two checks combined. But keep in mind, the replacement cost was $10,000. That's where your deductible comes in. You're gonna pay your deductible to the contractor to bring you up to that full value of $10,000. Now you're made whole and your roof is fixed. So this is just a super basic claims example, but if you want other really helpful information about how to navigate your insurance claim, download our free claims guide. It's awesome.